Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, September 30th, 2021. We're back with Logiq, LGIQ over the counter, LGIQ also on the New York Exchange in Canada. And for those of you new to our program, our goal is to bring you those stocks which have that 10x to 100x upside potential. We've already had seven, stocks that are up between 1,200% and 5,000% in the last 12 to 18 months. And we want to close out 2021 with two more 10 baggers to have a nice 10 baggers. And hopefully Logiq could be one of those. Logiq actually is already up. Actually, well, Logiq we introduced last year at around $3.50. The stock hit $14 within a few months. It's pulled back, because of a Canadian financing, of course, a few months ago, and I think we've hit bottom, and it looks like we could be very well on track back to $14 or higher. So with that long intro out of the way, Brent, welcome back.
Thanks, Jack. Glad to be here.
Brent, so there is some big news this week. I don't think investors really pay too much attention to, but I think it's actually very compelling. It's going to have a big impact on the stock. So you announced a couple of over the last week or so. You've put out a couple of announcements which can have a major impact on the stock price. Like essentially, what you're doing is you're taking steps right now to unleash shareholder value, because we've kind of discussed over the past, and I know that some of your shareholders, maybe some of your board also feels that the stock there's a lot of value trapped in the stock because of the two different businesses you have, and you're going to be unleashing that value. So can you tell our audience, just in plain English, what you see happening and how this is going to unfold hopefully in the next weeks ahead?
Sure, absolutely. Let me sum it up. So this week we had several announcements, one Monday and then certainly one today. The first one was the decision brought about by our board, senior management, and a number of our investors to split the company into two parts and spin AppLogic off into a publicly traded company, which we are in the process of undertaking now. That will be guided by our investment banker, Benchmark, which we announced today.
Okay, now it's very important. So AppLogic, so you got two businesses under one roof, right? So AppLogic is essentially that's the emerging markets, e-commerce and fintech business. So essentially one of the hottest, it's kind of the hottest space in the market now. That's where we've seen some major moves with companies like SEA, Jumia, because so essentially you have e-commerce, mobile m-commerce and fintech operations in Indonesia, which everybody wants to get into, whether it's SEA, Alibaba, everybody wants to be in there.
That's
300
true.
million population, mobile first. And also now this week, you're also entering Nigeria, which has got like 200 million population.
That's correct.
This is like, Africa is the last frontier for the internet, right? I mean, everybody.
Sure is.
And Nigeria has a massive growth right now, big emerging middle class. It's mobile first, right? Nobody uses desktops. It's all phones.
That's correct.
And this is, so essentially you got this very hot business, which, usually carries massive multiples. It's kind of trapped inside your thing. And so is it the thinking that if you split the two apart, the two parts are worth much more than the whole?
That's correct. It would imply a considerably higher valuation than our entire market cap right now.
So let's go through those numbers, right? So in Indonesia, the AppLogic business, right, which consists of what are the parts? Give us like the operating parts. What do you have in that business?
Predominantly Create App, which is the DIY mobile app builder, which small to medium-sized businesses will use to get their offline business fully online. And they build it on the phone. The users access it via phone. Everything is conducted via the phone. So that's imperative in emerging markets because, as you just mentioned earlier, very few people have desktop or laptops. And I would say on average, it's probably 10-15% of the population in those markets that do. So you can see that it's extremely important to have something that resides on this, is created on this, and is accessed on this only.
So let's say a guy has a I don't know, he's got a bicycle shop, right? He wants to sell bikes online, right, or whatever. Yeah, basically your thing allows him to build out an e-commerce shop on his phone.
That's right. In 2 hours or less, with zero technical expertise. Or we can also have a third party build it for them for an extra fee, which is very readily done. They pay on a monthly basis under a SaaS model or software as a service model, if you will. And that is basically how we grew that business. We are in emerging markets with the Create App segment. We also operate the e-wallet, which is known as ATOS Pay.
Okay.
We also have a hyper-local food delivery business, which is called ATOS Go. We just recently announced.
This is in Jakarta. So you have kind of like an Uber Eats in Jakarta, or is it Uber or what?
It's very similar. It's very similar, but in emerging markets, it's done by scooter or motorcycle, versus in developed markets, it's by car. We took it a step.
You're doing the same thing. It's like, in other words, some guy orders, a meal and it comes to him in 15 minutes. A guy brings,
That's right. That's right. But we took it a step further, and what we did is we put together what's called a geofence. So in other words, in your building there, if you want to order something, our geofence would be able to tell where you are via the phone, and you can only order from restaurants within a certain radius. But the trade-off is that someone on foot who's in your area will run over to that restaurant, pick it up, and bring it to you. And so the average time there is actually 14 minutes versus scooter or motorcycle, which is averaging about 45 minutes, which is kind of similar to what we're used to here, right?
No, because they have huge, in Jakarta, they have massive traffic. Basically.
Oh, huge. Yeah. 3 hours to go 10 miles sometimes. It's a nightmare.
And it's interesting. I don't know what it's like in Lagos, in Nigeria, where you're going to be going, but I know like in Vietnam also, in
Hanoi, Ho Chi Minh.
Basically, in Asia, traffic is a massive problem wherever you go.
Every major city in its respective emerging market suffers from that same problem, because you had so many people being able to buy cars, motorcycles, scooters, that the infrastructure just wasn't ready for it. And so you got more people in vehicles and smaller roads. So there's a lot of infrastructure build out, but in the meantime, there's a tremendous amount of traffic.
So we got, so you got a couple of you got really some very hot thematic businesses. You got the mobile commerce, which lets people do the mobile commerce, right? It's a SaaS-based business.
That's right.
You're generating monthly recurring revenue.
Yes.
You're also in the delivery business, which is like also a very hot business, has high multiples in the emerging markets, right?
That's right.
And now you got also the fintech side. And just in a nutshell, explain what the different aspects of what you're doing with fintech in Indonesia right now.
Sure. Okay. And I would frame it all by saying that everything starts here, operates here, and ends here. So none of these parts are radical departures from the whole mobile first theme. So everything is an app. Everything revolves around using the mobile phone as a means to order things, pay for things, follow up on things. So everything is consistent throughout. Now, those pieces can either be used all together or separately. They can be used all together in Jakarta, or they could be used all together or in pieces in Lagos, Nigeria, or Hanoi, Vietnam, or Manila, Philippines, or any other market that we would choose to go into. So that part is consistent. What we've recently launched, again, this is not a departure from what we currently do. We have launched a pilot program with the Social Security Administration in Indonesia, a government entity. They have 52 million members. and 600,000 small businesses on their platform. So these people, their payrolls are administered by the Social Security Administration. Their pensions and benefits are also administered there. The one thing that they've been unable to do has been take loans through an authorized platform against either their paycheck, which they would then repay out of their paycheck, or against their savings. And so our pilot program consists of enabling that, and there's three parts to it. So step one is with the employees of our partner. Step two is with a base of 5 million members. And then phase three is the entire universe of 52 million members, and should they so choose to use the platform.
Okay, Brent, by the way, I just pulled up the name because I had a hard time. So the name of this entity, the government entity, is BPJSTK, which stands for Badan Peralayan Jaminan Sosial Ketengake Jarajan.
Very good. Very good. You said it better than I can.
So that's
I
spend
a lot of time there.
So they have a 50 million plus. How many? So you're not gonna get all 50 million. You're gonna get probably a small percentage to start with, I'm assuming.
We would hope to capture a very meaningful percentage, because it is sponsored by the actual Social Security Administration. So it's authorized. The platform will be integrated into their app that they use to see what they've got in savings or how their stock portfolios have done, check their taxes paid to date, et cetera. So, and check their insurance. So it will be integrated in. So it is a likely scenario that the penetration rate would be pretty high. But what we've done is we've built a model around it where we're saying, okay, if we only capture 2%, the implied net revenue to us would be about $18 million US.
$18 million. What kind of margins?
Pretty high, about 65-70%.
That's big. Okay, so
it is.
In theory, that business could be worth, let's say, $8 million net. You could make 5 million net.
Well, bearing in mind those are gross margins. Year one we will have some expenses, but I think tracking over the following years, that would be an appropriate model.
Okay. So you got, so inside Indonesia, so I understand why you want to spin this out, because it's a very exciting story, and the market is paying up for these, fintech stories. Not even mentioning that it's an emerging market, which everybody wants to get into. Okay, so you got, so there's the fintech side, delivery, mobile apps. Anything else in there in Indonesia right now?
No, that's it. There's well, I'm sorry. Actually, there is. Yeah, we just recently announced it, so it's brand new. There is a partner, Mental Coup, which currently is the only licensed provider of driver's license tests in Indonesia. And so, what we're going to be doing is we're moving that from an in-person means to an app-based platform through our app, and that will. That'll be 100% online. So we're actually rolling that out this 2 days ago. We just rolled it out.
So yeah. Okay, but the idea also is that you're essentially taking these things and you're going to be kind of rolling out the same type of services in I think you mentioned. Well, now you're going to be in Lagos in Nigeria.
That's right.
With a partner, and also in Vietnam.
Soon, yes. We haven't announced that publicly, but we have stated that we're interested in other markets. So, it's not a trade secret or anything proprietary. It is a market we're very excited about.
Okay, and the bottom line is this: I think. Okay, so once you spin this business out, let's talk about once you spin it out, what could the value be, right? So, you're doing, I think right now about 38 million run rate. This App Logiq, what percentage, what does that comprise of out of that 37 million?
As of last quarter, about 30%. So, you could call it about 11, 12 million in revenues on the App Logiq business. Now, bear in mind the ownership that we have of the Indonesia business is through through a minority holding that Logiq Inc. has, but our shareholders have direct ownership in it. We do not carry that on the balance sheet, nor do we consolidate it into our revenues. So as a standalone, that is also at about an $18 million annual run rate, which is not built into our numbers. So you would combine those two together, so you'd come up with call it 36 million in total revenue and transaction volume.
Okay, so realistically, okay, and as a standalone company that's in the, if this was just a pure play emerging markets, mobile apps, fintech, you'd be trading at 10 times the revenues or more. I mean, the markets are crazy. Investors are looking for these type of deals. So
they
really,
are.
That business could be trading at a 150 million valuation out of the gate.
It very well could, and if you look at valuations, I mean they are quite high. I mean, you look at companies like Jumia, you look at C, you look at the recent transaction between Grab and Altimeter Growth, which is a U.S. listed SPAC. Another one called FinXL, which is a
Grab is the one that's what they do delivery.
It's the Southeast Asian Uber. In fact, they beat Uber out in Southeast Asia, and Uber sold their business to Grab. So Grab's actually coming public here in the U.S. in a $45 billion transaction, which is about, I think, about 18 times revenues.
Okay. And so basically, when it's let's say you're trading at 150 million, which is okay, reasonable, right? It's not nothing.
It is. I think that would be a lower end of the multiple.
So here's what's compelling from the investor standpoint: the value of Logiq right now, the market cap of Logiq is only it's not even 100 million. It's we're at 80 million right now, roughly.
About 80 million.
80 million plus. So essentially, this business is going to be worth, potentially 150 million the day it goes out. So in theory, somebody who's a shareholder right now would, they're going to get, I guess the shares, dividended out, right?
That's right.
So now if they're sitting with a business that's worth 150 plus the ad tech business that you have, which is 25 million. Now that could kind of breathe on its own, it's sort of has more room. It's almost like, I guess a good metaphor is when you plant a tree or any kind of plant in a small pot, it's limited, or fish. If you put a koi fish in a small bowl, it'll stay small. But if you put it in a pond, it can grow to 5 feet.
Yeah. Yes, that's actually a good analogy. And I'm guessing you probably have some koi fish around the office, right?
I don't, but I saw some koi fish the other day, in a pond, and I was like, this is good size, right?
Yeah. Don't put your hand in there.
Steal one because I think there are some of them go for a lot of money. They go for a couple of. I saw it in the shopping mall. It was that thing koi fish. I was gonna grab one, and take it home.
Not good eating though. You don't want to eat them.
So. But the point is this: so essentially, a business is just like any other kind of living organism. Once it's put into a bigger pot, it has room to expand. It can breathe on its own. It can grow much bigger. The value becomes unleashed.
That's exactly right, and that was the entire reason for doing this. And we will do it very quickly and very aggressively because we've been talking about it for a while, and it is time to do so.
And now you're doing it. You got the bankers working on it, right? So
that's correct.
So the ad tech business, which is doing 25 million, that's also a business which carries big multiples, and we could talk about comps, etc. So that could be 10x. So that's 250. So now all of a sudden, let me see if I'm doing my math correctly. We're up to 400 million. By basically splitting apart, you're unleashing $400 million worth of value, which is 5 times the existing valuation.
That's correct.
Now, I think the only thing is, I think the only caveat is that in order to sustain that and to grow it, I think basically these businesses are going to have to, what's going to be the game plan to continue their growth, because people aren't paying 10x for, they want to see big growth.
Right.
So let's talk about the growth now.
Let's do, because this is actually a starting point, not an ending point. And what we are doing right now, we've talked about it on your show the past 3 times. We are in the process of evaluating M&A on the ad tech side, because as a pure play in ad tech, what you will see is the ability to go after other targets that are revenuing, that are profitable, that would be accretive, and would absolutely represent a growth platform that takes us to scale. And so that's the other side of the equation we're looking at. And
you're doing 25 million. I think we've talked about before that you want to ramp up to about 100 million run rate from there. And also you've done, I mean, you grew the business primarily through acquisitions, organic, but you've done some substantial acquisitions. So to get to that 100 million through M&A, like how long do you think it would take you to get to that number? And what are you looking at? What kind of deal flow do you have?
I'm spending today I've spent around 5 hours either on calls or evaluations of business models and customer lists of M&A targets. And incidentally, earlier today, I also got a call from one of our, I'm not going to call them deal finders, but they are business brokers, but they've been tasked specifically with finding companies that fit a specific profile. So very similar to our business, but the key things we're looking at are profitable, would stand to gain from centralizing certain functions, whether it be finance, marketing, advertising, coming onto our platform. It would also enhance our margins as well. We're looking at companies in size from as small as 3 million in revenues to some that are significant, considerably larger than us. Now, whether or not we'd be able to acquire them in whole, we don't know on the large side, but there's a lot. There's a lot of very
there's deals out. There's business to be done.
There's literally hundreds, and
yeah.
So it's just a matter of finding the right one, and that's going to be driven primarily by the type of people who run them and manage them, because we have grown through acquisition in the past year on the ad tech side. That was relatively slow because what we were doing was building a platform that followed was actually evolving a strategic roadmap. So when you do that, you naturally you take a measured approach. Now, once you know what you want and you fill the pipeline, you go after it aggressively. So, can you scale up much faster and much higher than previously? Yes, we can.
Okay. And one thing I forgot to ask you, when do you anticipate doing this spin out?
Well, we haven't said so publicly, but I would say that our internal plan, my personal desire would be to get it done before the end of the year, so that you could go into calendar and fiscal 2022 with a pure play on the ad tech side and a pure play standalone on the emerging markets fintech side.
Yeah, I think that would be really. I think that would be a real game changer, because again, people want these days. They want that kind of pure play, and the assets inside the fintech, these emerging markets assets that you have. I mean, they're really sexy between the Indonesia.
They are.
Nigeria, the mobile m-commerce. I mean, that's what everybody wants. So
they do. They do.
And okay, so the ad tech, So okay. So the game plan is to get this out before the end of December, which is a few months away.
That's right.
It could take longer also, because when we talk about listing on the Neo Exchange, the whole Canadian, that took a couple months longer than I expect. And these days so it could happen. It could take a little bit longer.
It could, depending upon the means with which you do it. Now, if you try to take it through an IPO, that would take longer. Now, if you go public through an existing public vehicle, which is a totally different, separate conversation, but that market has contracted immensely. There's FINRA and the SEC just delisted about 1,500 non-reporting companies. So it's cleaned up a lot. It has validated the whole means of going public that manner. That's actually how we got Logiq public. And there's a number of other examples. One very quickly, you're seeing some of the major SPAC-centric bankers that are doing these billion-dollar deals. They are now working with OTC markets to do OTC-listed SPACs because the size can be smaller, and that opens up a whole new universe of targets. And so, but when I say smaller, I'm still talking about market caps of 100, 200 million, 500 million, but they don't have to go after these billion-dollar transactions.
Yeah, because there's only so many of those. I mean, it's just
that's right. That's right.
I think a lot of them are going to be like they're going to be kind of left empty. I mean, I don't think there's enough those size companies out there, like good ones.
Yeah, that's right.
So okay, so let's talk about I want to go back to the ad tech business, which is called Data Logiq.
That's right.
I think once you do the spin-out, it'll be so much easier because we could just talk about one thing instead of, because it kind of sounds like AppLogic. Data is a lot.
It's confusing, and we've gotten that feedback, Jack, from institutional investors we've spoken with, and there have been hundreds of conversations there. The analysts that we speak to that are looking to cover us, I probably shouldn't discuss that too much, but that has been an insight that they've given. They've said, you guys should really be a pure play because it's difficult to build a model around that, right? Because then you have to talk about some of the parts, and some people don't like some of the parts, but anyway, I think
they want that pure play. So
they absolutely
give them what they want. Yeah, give them what they want. Let's talk about the ad tech business for those people who want to keep the ad tech. For those who want to, I don't know, maybe 3 months from now, somebody's going to be watching this video. They say, "Hey, I'm interested in the ad tech side." So, just from a top level, from like 30,000, whatever you call it, what exactly? Tell us about that business. What do you have? How are you going to grow that? Like, what's the organic
Got it. Okay. So
your customers, that type of thing.
All right. That business is simply described as helping online businesses sell more to either their customers or find new customers that are specifically interested in their products. It sounds easy to do, but it's actually quite hard because there's 1.7 million e-commerce stores, and there are 5 that control about 53% of the entire e-commerce market. So you think about that. You got 5 companies, and everyone knows who they are. It's like Target, Amazon, Walmart.com, Alibaba. If they're dominating the market in terms of sales, they're also dominating the market in terms of advertising, because you don't stop advertising even though you're number 1, 2, 3, or 4, or 5. You advertise more, because you have to maintain market share. You have to keep your name in front of people because they want to know that you care about them. And so they spend a ton of money on advertising. But what that's done is it's shut out these other 1.7 million small businesses that have to compete against them. Their ad budgets are nowhere near there. They don't have access to the same online tools. And so what we did in the past year through these 3 acquisitions is we created a platform that is geared specifically towards the small to medium sized businesses, actually the small ones, and ad agencies that service them. And so now they can access the same things that Amazon can when it comes to trying to design an ad campaign. And we've made it easy. It's not something that they look at and go, "Gosh, I'm confused. How do I do this? How much time do I spend?" We've made it easy. We've made it transparent. They pay 15%. Normally, you pay 35%
of the ad spend.
That's correct. That's correct.
Okay. So basically, what are you doing? You're basically is it like a tool to buy online ads, to buy like online traffic and all that stuff?
More than that, but simply put, yes. You can say, okay, I'm targeting this demographic. These are the people who have historically bought. Mm-hmm. Okay, and you would naturally say, okay, I want more of those. Now, when you slice up the demographic, what you typically discover is that it's not just a very superficial profile. It's not males 18 to 35 who make 80 grand a year, who drive this kind of car. It's deeper than that. There are other data points on all of us,
Yeah.
that if you dig deep, you can put those together. And
So highly basically, you help your customers create these super highly targeted campaigns, so that, in other words, I guess what you're saying is that you're going to help them buy ads because they're super targeted. They're going to be spending less. They're going to be saving money on the ad buy, and because they're highly targeted, they're going to be getting better results. So
that's
save
correct.
money, drive more revenues.
That's correct. Yes, and we give them all the analytics. It shows that their return on investment, their return on spend is higher. It shows the transparency of pricing, so they feel comfortable about spending more. And so, if it's more effective, and they come back for future business on an ongoing basis, and that's a great business model. And what does it do? It enables them. So, we think that this is a really great place to be going forward, and we're seeing it in.
And I'll tell you what's great about it. This is okay. You're getting 15% of the gross spend, right? So
That's right.
So if a business spends $100 grand on advertising, right, a
Yes.
year, you're getting 15 grand.
That's right.
Okay. Warren Buffett. One of the things, back when people used to read news, he loves the advertising model business, right? Like, he would always say the reason why he loved investing in newspapers back in the day, back in the night, up until, the internet, was that he considers a newspaper or any type of what do you call it? He called it a gross profit royalty on all business. Because, in other words, he's a toll collector, because every business, any real business, has to spend money on advertising and marketing, right? So
That's right.
spend some percentage, right? So in other words, because you're in that thing, you're collecting a percentage of all sales. So, if it's like, and that's why he loves that. Buffett loved that business. So in theory, listen, if Warren Buffett was, maybe he's not. I don't think he's into the internet stuff still. But if this was, if he was maybe 45 today, he'd probably be into this type of thing, because it's a pure play on the growth of across all these things, and you're basically so your customers, from reading some of your press releases, looking at the site, so you help them buy different types of ad media, ranging from basic, what is it, banner ads, pay-per-view, to video, to podcast, audio,
Podcast, yes.
Pretty much every form media, social media, everything.
It runs the gamut, yes.
And so you can create these highly targeted things. What's the average? How does somebody model? Okay, so how would an investor be able to model that business? In other words, like your average customer, how much are they spending? How many new customers are you getting? How do we model this business? How do we model the growth?
It's a challenging thing, because the approach we're taking is not a excuse the analogy. It's not a rifle shot approach. We're not going after individual small businesses. We're actually going after ad agencies that service small to medium-sized businesses.
Okay. So that's
some of
better.
those. It is, yeah. Because otherwise
it's a wholesale. You're basically you're like a white. Is it not white? But basically you're servicing the ad agencies.
We are, but they would be using our platform. They have dedicated people within the agency that are already capable of utilizing these platforms and tailoring them to their specific clients' ad campaigns. So they already know what they want and what they're going after. But we help them, because the AI components within this help them better target the demographic they're looking for. And so if they can show their clients a better return on ad spend, then it benefits them, it benefits us. So it's tough to say. I'm not trying to evade it, but in the early days, what you want to do is aggregate as many ad agencies as you can, and then it feeds on itself, because as people run successful advertising campaigns, they feel like they don't feel like it. They're going to see that they've sold more on this versus what they were doing before. They come back and
So your customers are ad agencies, and these ad agencies are probably spending millions of dollars, because each agency may have if they're small agencies that might have 100 customers or whatever it is, they might be spending $1 million a month on ads minimum.
Yes, that's right.
So each agency, right? So I guess the question is, how do you get more of these agencies? What are you doing? Now you mentioned something interesting. You mentioned AI. I think you bought a couple of AI businesses which are like optimizing or for targeting ads. What are you doing with AI? Like, how does AI, artificial intelligence, fit into giving your customers an edge? How do you give your customers an edge in the ad buying business?
Sure. Well, if you look at trying to do it on a manual basis with with a human, trying to sift through what those demographics of an ideal customer would be, it takes a long time, and there's error. I'm not saying that doing it through a machine is error proof, but it's considerably faster, because what our platform is able to do is it's able to capture all the data, okay, all those data points on millions of people who have bought certain things before, and look at cross-reference, everything from what's their income to where do they live, what's their zip code, how many devices do they have, what do they search for on them, what type of car do they drive, what's their route to work, and what it does is it pours all those into a funnel, and it arrives at several facets of an ideal customer profile. And it spits it back to you. I mean, literally in seconds, and it'll tell you, okay, well, you have sold products to males between the age of 18 and 35 who live in this.
I'll give an example. Okay, so I'll give an example. This is fine. Just sort of something interesting, right? So, it's all about target, creating ads. So, like, I remember buying an ad, trying to buy ads. It's very complicated for anybody who's not in the, just to, do like a keyword, targeting keywords. Let's say you're selling, okay, so let's say I'm selling this soda, or the Pellegrino. It's the orange. This is great. I don't drink soda, but I just got this. Now I wanted to try. I actually had the. How do I get this? Okay, so how do I? Okay, so I'm not. This is not an ad campaign, by the way. They're not paying me anything. But here's what I'm thinking, right? So this is. It's kind of it's relatively speaking, it's an organic soda or whatever. It's made in Italy, right? So somebody likes Italian food or whatever, or aficionado, whatever, Italian, whatever. So historically, it's very difficult for somebody to target ad campaigns. Let's say this company wanted to target a buyer, right? How do you find somebody who might want to drink this, right? I mean, in theory, there could be somebody who drinks soda, but your AI program can figure, okay, if this guy did a Google search for, I don't know, in the last 6 months, if he's on his, because, there's cookies and all that stuff on the internet. If you looked for, typed in, any kind of Italian car, like Alfa Romeo, whatever, for whatever it is, we're gonna run an ad to target him, something like that, or whatever it is. So there's also very, very sophisticated things which, inference, and all this crazy stuff that you could do.
That's right. And there's a lot of very obvious keywords. I mean, in the example you just showed, I mean, what keywords would that company migrate towards? They'd say, okay, well, people who look for flavored drinks, fizzy drinks, orange flavored drinks, Italian sounding names. I mean, those are the obvious ones, right? And so
vaguely healthy, whatever. Yeah,
that's right. And so their competitors are also bidding against them for the same keywords, because those are the obvious ones. Yeah. Okay. Because those are the searches that people.
But imagine this. But your program or your AI could come up with something like, okay, if this person did a keyword search on, I don't know, a vacation to, I don't know, Portofino, Rome. We'll run an ad saying, hey, get a taste. You can't travel now, but you can get a taste of Italy in this can right now at your local grocery.
That's true. But that's true. But that's only part of it, because it's not just the keyword searches. It's also the underlying demographics of people that have purchased that in the past. So what you do is you look for keywords within those profiles. So let's just to simplify it. Let's say there's 1,000 people that purchased that drink in the past. Okay. So let's say that most of them are between a certain age group. Let's just call it 25 to 35. Okay, they are business professionals, right? I mean, because it's not a cheap drink, right? Okay.
No, I think it's the same price as a Coke.
Oh, okay. Well, there you go.
I mean, I think it's less. I don't know. I think,
at least
75 cents. I don't know.
Okay. Where I'm going with this is that so there are some very obvious demographics that you would look at, and if you said, okay, I want to purchase it's not just keywords, it's also purchasing leads, actual names of people. Okay, but within that, those people who bought those drinks may have other data points about them that are not the obvious ones. A high percentage of them may be Pilates attendees, yoga.
Right. Oh, so you can buy those, and you can buy the yoga
and those are cheaper. Yeah, no, okay. Those names are cheaper because your competitors are not naturally thinking, oh, hey, let's go after people who are into yoga, or or maybe they drive a certain type of car, which is obvious. So maybe it's Audi owners, but within those Audi owners, maybe some of them also are mountain bikers, right? So buying leads of people whose names are on there that are mountain bikers are going to be cheaper than the ones who have purchased Audis. So the AI calculates all of those things, and there's 330 data points about a person that you can get, which is a little scary, but that can help broaden yet also narrow the things about a person you want to know.
You're right, and the other thing the AI can do is, because again, like, you have to realize, okay, so these agencies, they have a lot of clients, right? Let's say they have 100 clients, which is not a lot. That's like a small agency. They're going to create campaigns for multiple products, for multiple clients, multiple media. I mean, it's a full-time job, being an ad buyer, right? Like, and these ad buyers, I know that back in the day, like an ad buyer, it wasn't like it wasn't like super, they wouldn't get, like, it was a very entry-level job, right? Like a media buyer, I think, was an entry-level job, right? But there's a lot of money at stake, right? So what your AI does is essentially basically makes somebody an Einstein. It takes like somebody who's average, somebody who's like a C student, and turns them into an Einstein, because it helps them like arbitrage these different data things. So while normally, let's say Coke is paying, I'm just going to use $1 a click to reach those buyers, your system might get those clicks get the same exact people for 22 cents, because they're going to get it through some other demographic to reach the same people. They're going to get them to a different site, or they're going to find, like, they're going to reach them on a podcast or this or video or something.
That's correct.
Through whatever's on. So it gives you a tremendous edge, basically.
It gives the client, in this instance, the ad agency, an advantage. And just to very, very simply explain how much of an advantage that is. I mean, you look at the trade desk, you look at their past 5-year trajectory, it's been monstrous.
Yeah.
Why? Because they've created a set of tools that Coca-Cola uses, Walmart, Amazon. So all the big advertisers use the trade desk. So what do you need to use to access the trade desk? Well, you have to spend a minimum of $10 million a month in ad spend, 10 million a month. So small and medium-sized businesses, they're unable to do that. Most of them may not even have that much in annual revenue.
You're basically, Brett, you're like a trade desk for small to medium business. Is that the idea?
That's correct.
Okay, so so that makes it a very powerful proposition. I understand now why you want to split apart these businesses, because it makes it much easier for people to understand. Now, some guy might only be interested in the ad business. Hey, I want the trade desk of small to medium business. This is a growing area. Some guys say, hey, I want to pure play on fintech and e-com in the emerging markets.
Yep.
Because, hey, how many pure plays are there for Nigeria or Indonesia?
There's just a couple. Currently, there's only a couple. Ideally, we want to see
nothing
more.
Under $1. These are usually $100 plus type stocks.
Yeah, that's right. Yes.
Yeah, so it's very, very compelling. Okay, bottom line is, so the key takeaway is this. The immediate catalyst, I think this is the most important thing that people want to know, is what's the catalyst? Why should somebody be interested in, like at any given point in time, like you look at a stock, it's like, okay, am I a buyer or a seller? Forget about hold. Am I a buyer or a seller? So right now, the immediate catalyst for Logiq is this. You have a built-in 5x upside, essentially, once this split happens, because the Indonesia fintech business could be trading at 150 million market cap. The ad tech is 250, and that's not taking into account any other growth you're going to have, right? This is based just on comps. So if you do the math, that's 400 million. That's $400 million market valuation. Your current market cap is about 80. It's 5x, right? Did I do the math?
You did.
Okay, so 5x. Just checking. Okay, so there's a 5x upside, and then on top of that is those businesses. Each one has the upside with the ad tech business. You got M&A plans to get to 100 million, which is going to give you $1 billion valuation based on comps. So that's going to give you a 4x from where it comes out. And the fintech business by itself, I mean, I'm sure you got other. What are your plans to grow that business? The emerging market stuff. I mean, that kind of
quite aggressive. We've also met a number of companies over the years, as well as ones we work with that would desire to be part of a standalone publicly traded company. And so it would not be surprising to see some of them joining us in terms of an M&A strategy, in growing that way as well.
Okay. So there's a lot of exciting opportunity. Okay. And one last question I want to ask you, I remember early last year when you first came on the platform, I think, back in last December, I think you were talking about, one of your goals is to get uplisted on the New York Stock Exchange or NASDAQ. And one of the ways you said you were going to do that was to, list on this New York exchange, which is where you got listed there in Canada, which is the Canadian listing. That has a lot of benefits, which I think we're going to start to see. But there's a way to get listed from NEO onto NASDAQ. So what's the plans for NASDAQ right now for a NASDAQ listing? Are you still on track on NASDAQ on NYSE?
I would point to this Tuesday's filing of an S3 with the Securities and Exchange Commission. You would typically see that with existing public companies that intend to uplist. I think to go effective, it's anywhere from 5 to 7 days, unless they have any questions. And so at that point, we would then, in theory, go back to a senior exchange. They also know that we are listed on another tier 1 global exchange, the NEO. So it does make it a more streamlined process. And so they would take all that into account. They would see that we do meet all the criteria, which we currently do. And they would start a very efficient and streamlined process to get us uplisted.
Okay. Excellent. Okay. Well, on that note, there's some exciting things in the works. Brent, on that note, thank you. And we'll catch up with you on the next live stream.
Great. Thanks, Jack.
Okay.